Hello everyone, my name is Moji. You're watching a Bitcoin Bubble news channel. If I look back at all the years I've spent, most of the time I've seen double, triple, or even 430% drops. This one has been 27% in Bitcoin. It fits pretty well into the standard range. And you should think about where the economy is right now because that's what drives cryptography. Things are slowly getting better, inflation is going down, and rates are going to go down. This is usually a very good time for crypto. The wind is now behind you. Crypto fans who support or are willing to think about the Democratic candidate for president, Kamala Harris, has 88 days to convince the U.S. that her choice for vice president will be better for crypto policy than Donald Trump's choice. Harris hasn't said much about economic problems, like those affecting the crypto industry, since she started her campaign for president on July 21st after President Joe Biden decided not to run for re-election. This is because she is busy getting ready for events in battleground states. Trump's team, on the other hand, says that the Republican nominee won't hold any big rallies until August 22nd, after the Democratic National Convention. The sudden interest in digital assets by the Republican ticket and the lack of clarity about Hersey's position on crypto have gotten a lot of attention in the industry. Members of Hersey's team have already talked about crypto policy with executives from companies and White House staff who work in the crypto business. Report that people who back her candidature are moving to her campaign or to political action committees. But digital assets and crypto aren't a big part of her campaign just yet. CEO of the Crypto Council for Innovation Shiloh Warren told Cointelegraph soon after Biden's announcement in July that Harris knows where crypto and digital assets can play a key role that will only grow in importance if U.S. laws allow it. Representative Y. Nichols of North Carolina made it clear that Democrats are not giving up on this subject to Trump. Representative Nichols, businessman Mark Cuban, and other leaders in the field will be speaking at a virtual town hall on August 14th put together by the Crypto Advocates for Harris Group to push the Democratic nominee to come up with a clear policy plan. Since Harris's campaign started, polls have shown that she is running a close race with Trump in key battleground states. This has caused many people in the crypto community to hedge their bets on the result of the election. The market forecast site PollMarket used to say that Trump was ahead of Biden, but now it says that the race between Harris and Trump is a toss-up. Some crypto companies have paid attention. For example, Coinbase CEO Brian Armstrong said during an earnings call on August 1st that the exchange is becoming more confident that the next government, whether it's Democratic or Republican, will be positive towards crypto, pointing out that the tone of the speech has changed. Another question is whether or not people are using the technology. Is it being used to build something? And that's still going on. When big events like the ones in the news these last few days happen, people tend to think they will only last for a short time. If the economy felt a little more fragile and the business cycle was getting old, then you might be afraid. But this is still early in the cycle, so you should expect some volatility. I've always dealt with it by making you look forward to it, which is a Jedi mind trick. You can buy more when it happens, and your earnings will grow over time. Much better than anyone who does nothing or tries to trade around it. You should think of these sales as gifts that make you think, wow, if I can find a little more cash, I can put it into the market. When you use that approach, you tend to do really well over the cycle. Most of the time, not the change in interest rates. So what if your rate goes from 10 basis points to 25 basis points? No one cares, right? The yen moved, which is what it really was, because you have to pay back. You're borrowing yen, so when it starts to move around a lot, you start to worry. It got a lot stronger. All of a sudden, the dollar value of the yen you borrowed went up. In this case, everyone lowers their risk. And that's what really happened. The Bank of Japan got involved in the currency market because their own currency was too weak. They sold dollars and bought their own currency. Oh my God, that's where everyone who borrowed yen went. All of a sudden, yes, I'm getting a good deal on borrow, but the yen is changing by 2% every day, and I'm losing a lot of money. At a bank or hedge fund, a risk manager will tell traders they need to close their accounts or lower their risk. The risk manager walking up to someone and telling them, listen, you're losing money on this side, you need to start lowering risk. That's pretty much what the last 4 days were all about. That's why crypto, the NASDAQ, mining stocks, oil, and any other risk gets hit. But these only last a short time because people lose their positions when the market settles down and gets used to the change. After that, things start to return to normal. I call these macrospasms. They won't last long most of the time. Could it last a week? Could it last 3 or 2? That's possible. 2016 was a lot like 2015. The dollar was really strong. The world economy moved very slowly. Because the dollar was so strong, trade around the world had slowed down. The Japanese then stepped in and changed their currency. Every market went up in flames. The exact same process. However, after that, the central bank began to stimulate, especially the Chinese, who had been waiting for this chance to do so. The Europeans and the UK the last time. I think the Chinese will be the ones to stir this time. Their currency was too weak, and they didn't want to lose control of it, so they couldn't cut interest rates or make monetary policy more loose. That's why they got to boost. But since the dollar has lost value, they can do more. In the end, I think it's probably a good thing. Simply wait a few weeks, and it should be very good. There are many things that cause inflation, but housing is the main one that takes a long time to show up. And wages are going down. That means inflation should go down a lot. Now let me show you something called inflation break-evens. This is where Wall Street thinks inflation will be in a year. It's at 0.63% right now on my Bloomberg screen. In other words, they're pricing in a huge undershoot of inflation. What this means is that rates need to go down a lot. They're likely 100 to 150 basis points too tight right now. And I think they should go down to about 2%. This is also helpful because the US Treasury has to roll over $10 trillion in debt this year, and doing that at 5.5% is very expensive. Not as hard to do at 2%. I think it's a good thing, and the Fed will want to keep rates as low as possible for the next year when they have to pay off all this debt.